friends. Chris Marcus here with you on March 9th, 2018. And I know I say it every week, but again, another fascinating week in what we know as the stock market, certainly here in the US, because since I have odd hobbies and like listening to things like Federal Reserve Chair Jerome Powell testifying before Congress. I've actually been going through this one, which is fascinating in its own right, just seeing the back and forth between Congress and the Federal Reserve. It's quite theatrical, and but the best part is that every couple of minutes or so you uncover another whopper, which is just like, did you really just say that? So to kick these festivities off, I forget this fella's name, but he basically asked Powell a question about the balance sheet, which, if you're not familiar, following the housing crisis, the Fed started buying a lot of these debt and treasury securities that seemingly no one else wanted to, and it's been claiming that, it's finally going to get rid of all that stuff and let it go. So we'll pick it up right here with this question. Hopefully you can hear this one, so here we go.
About that. With respect to normalization, I think you have said publicly that you expect the new normal with respect to the size of the balance sheet to be roughly 2.5 to 3 trillion and get there over 3 to 4 years. Do I understand that correctly, Mr. Chairman? Yes. Okay.
What? So just a quick recap. We'll take a look at the Fed's monetary base, which basically from its inception until 2008, we were about at 800 billion. Then housing market, Lehman collapse, Fed goes insane. So after 100 years took us to get to 800 billion. Now we've been up near 4 trillion. With all of the toxic assets the Fed purchased back then, again, because nobody else wanted to. So it's still bad debt, yet the Fed claims that as it's raising interest rates, it's also going to start unwinding this, which it's been saying for about a year now. And again, the Fed says a lot of stuff that, maybe I'm a little bit skeptical, but I just take with a grain of salt. And sure enough, here we have the 1-year chart of the Fed monetary base. And again, this is from their own website. So, I don't know. The numbers, I'm sure these are generous in their own right, yet even their own numbers, here it was 3.8 trillion, March 1st, 2017. And as of today, close to, or at least the last number here, 3.9 trillion. So pretty flat, yet slightly more. So what's amazing here is that, of course, a lot of talk about undoing all of the printed. Another way you can translate all of this is that more money was printed, whether it's actually physically printed at this point or just another zero added on, which, by the way, if you ever watched Ben Bernanke's appearances on 60 Minutes, where it was stunning how he just said, we go and mark up the account on the computer, add an extra zero. So you can translate all of this as printed money. And again, here it's time where when the Fed says they're going to normalize their balance sheet, meaning this was supposed to be temporary. So that would mean taking it back down. Unprinting all of the money would be what normalization is. Although the reason I played the Powell clip is that now he's saying what he considers normal is not going back to even where we, if you were, theoretically, if you weren't printing money all along, we're going back to zero on this chart. Yet, even if he was talking about what was considered normal prior to the housing collapse in 2008, around 800 billion or so, that's not even part of the plan anymore, which it's amazing with all the attention focused on the Fed. Somehow he's slipping in here that now, at least what he considers a normalization would be getting it to 2.5 to 3 trillion. And of course, that's in 3 to 4 years. keep in mind this was a crisis that, well, I guess you could make many definitions of when it began, could be decades ago. But at least when it started imploding was back in 2007. You started the stimulus 2008. So still we're a decade later. Rates can't even get to 2%. Here, the balance sheet, we're not even talking about going back to normal, but 3 to 4 more years, maybe getting it down, if he said 2.5 to 3. So really, it's talking about if it only gets to that upper bound of 3, that would be 0.8, 0.9 trillion. So less than 25%. And exactly how is that going to work? Especially, we've seen, here is our interest rate chart. Yields have kind of settled down over the past couple weeks, although after today's job report, which again, I wouldn't put too much stock into that one either, but at least as it's put out there, was saying that things are better than expected job-wise, although wages were not. In either case, you see that yield getting close to 3% again. But if the Fed's going to raise rates, normalize, even attempt to normalize their balance sheet, then yeah, you would imagine rates would continue going up and you would have trouble in the stock market, which we've continued to see, especially because the latest Trump now, we're a lot of talk about trade wars, tariffs, none of which are a good idea economically because they just make things more expensive for people, which is, of course, unfortunate. And then just to point out how silly the whole thing is that here Treasury Secretary Steve Mnuchin, advocate of the weak dollar policy, said the process will continue to determine whether other countries should also be excused. So basically here Canada and Mexico might not be the only two getting a break. It's just interesting that, again, here we have this environment where if kind of arbitrarily, tariffs for you, no tariffs for you, and not really the way you want to run an economy. And what do we have here is Iran banning use of US dollar in trade, following the whole China petro yuan. So you continue to see people saying they've had enough. We're not going to take it anymore because we don't have to. Because what's amazing is watching all of these actions unfold, agitating the largest creditors. Well, what do you expect them to do? So, which is with the leverage being that now the U.S. so dependent upon money printing. If the Fed isn't going to buy the bonds and China's not going to buy the bonds, then essentially you're talking about a government that exists based solely on its ability to finance what it spends with paper. And if you're taking those legs away, which certainly it's not like there's more demand for paper, then that's again why I talk so much about cryptos and gold and silver, both of which are not having their finest month. Here we see the cryptos have gotten slaughtered again over the past day or two. Nothing fundamentally changing that I'm seeing so far. Again, you're going to have a lot of volatility. Certainly, we've seen that. But in terms of why there is the interest, again, these things didn't go down to zero. I mean, Bitcoin's down, still 8,700. My blessed Litecoin at 175. So yes, they're lower, but it's not as if the reasons that led people there in the first place, especially in conjunction with how we see just insanity from whether it's Jerome Powell's now new normal $3 trillion balance sheet. Again, I wish I knew the exact timing, yet it's all these forces that are saying what we have is unsustainable and necessarily must shift to something else, all still at play. So if you're holding your cryptos there, or let me rephrase that, as I hold the cryptos that I own, I'm still following my strategy of doing as little as possible. Same with gold and silver here. Both metals up a little bit today on the job report. Gold $2. So gold about 13.24, silver at 16.60. And certainly, if you're thinking of, all right, I see all these things happening, what's something on the safer side that could actually be thought of as savings? I still feel silver in particular fits that bill pretty well, especially getting your own physical silver that you can hold. Be very cautious about paper silver. And people often ask, well, where do we buy gold and silver? Well, my recommendation is Miles Franklin. Again, I do write for Miles Franklin now as well, although I think you're dealing with a good man there, Andy Scheckman. And by all means, search around and see the different places that you feel comfortable with and hear the different opinions. But in either case, that's where I go at this point. For anyone who has been wondering about cryptos, just a quick alert here that on the Arcadia YouTube channel, we now do have a how to buy Bitcoin and Litecoin on Coinbase and GDAX video. And for all of you out there who want to know how to buy the alt tokens, you see down here how to use Ether Delta and My Ether Wallet to buy alt/utility tokens and coins. So it's all there. And on one last note, I think I'm the first economist to work in a trade war with Frank Drebin from Police Squad of Naked Gun, if you could see him in the thumbnail there. So I was just feeling really proud of that and thought I'd share that. So with that said, yeah, it's fascinating stuff happening, but good times, and certainly there are solutions to all this stuff that's going on out there. If you have any questions, leave them below, and we will see you next week. So long. The land of our